it sounds like altruism almost, but it was ego in the sense that he couldn't psychically accept that he lost money. And to me, if the story is true, he returned it and all that, it was still incredibly sort of revealing to me that he felt he had to reimburse rich people when the market turned against them briefly. And as Ike Sorkin told me, his lawyer, people who were his clients figured out pretty quickly, hey, you don't lose money with this guy.
My guest today is Jim Campbell. Jim is known for his hard-hitting interviews of leading figures from the world of business, politics, and sports. His latest book is Madoff Talks, uncovering the untold story behind the most notorious Ponzi scheme in history. His book has been called the definitive, in-depth account of the spectacular rise and fall of Bernie Madoff and the greatest Ponzi scheme of all time, and features new, exclusive, never-before-published details from Madoff himself. I recently sat down with Jim and we talked about how he got access to Madoff, what motivated him to run a Ponzi scheme, and how Madoff's victims were victimized twice. Jim, I want to thank you for coming on the show. I greatly am looking forward to our conversation since we spoke about a week or so ago and since I read your amazing book.
Thank you, Charles. Great honor to be here. And you got a great, impressive background. And talking about background, that American flag looks very nice behind you, too.
Thank you. Same there. I see a flag behind you folded. I hope.
I do. That my daughter's boyfriend, that was in the Air Force in Iraq. And that's a flag from Iraq that was raised there.
Nice. Really nice. That's great, man. That's absolutely. How did you get it?
He gave it to my daughter to give to me.
Nice, man. He wanted to get in good with his future father-in-law. Nice. Smart boy. Smart boy. All right. So Madoff Talks, uncovering the untold story behind the most notorious Ponzi scheme in history. Before we get into anything, for those who have been living under a rock, Madoff created, masterminded the most amazing Ponzi scheme in history. Close to $65 billion, all fabricated, taking money from Peter to pay Paul. That's all you have to know about a Ponzi scheme. Jim, how did you, when he was sentenced to 150 years in jail, how did you gain access to him? And after I read your book, I was telling you, I got sick at certain points, and all a compliment to you. But the book really just hit me really hard in certain places. But how did you gain access to this man and get him to open up as best he could?
Yeah, I tell you, Charles, I have to be honest, there are a lot of fortuitous coincidences. I was taping a live show then and had a guest, Lori Sandell, who'd written a book that Andrew Madoff and his girlfriend, Catherine Hooper, had cooperated with. And she says out of the blue, if you want for your prep, I'll hook you up with Andy and you can talk off the record, obviously, because he had too much litigation threat to do anything on the air. We talked to him. We seemed to hit it off. I started off right from the get-go bombarding him with questions, accusations. I found him to be pretty open. He said, Jim, your show's live. I've just talked to you now. I'm going to listen tomorrow to see if you are saying the same types of things you're saying now. After we finished, the second fortuitous coincidence, his mother, Ruth Madoff, was moving from Florida to Old Greenwich, Connecticut. I happen to live in Old Greenwich. I said I would take her out for lunch because she's not going to know anybody and no one's going to want to associate with her anyway. And it's in December. She comes into the restaurant. There's no one else there. She's wearing sunglasses even inside until she took them off. And we hit it off. And I found her to be very open. She ate a chef's salad like she hadn't had any food in 3 weeks. And then when we walked out, I said, can I get a picture with you? And she stopped and said, you're wired, aren't you? And she thought I'd set her up. But once I set her straight, she then introduced me to Bernie. Bernie said, based on what Andrew and Ruth have told me, I'm going to talk to you and hope you can dispel some of the myths around this. And first off, Andy never spoke another word to his father after he confessed. So that couldn't have been accurate, or it had to come through Ruth. So that's how it happened. Now I got to tell you, I've wrecked my mind on this as well. As why did they trust me? Why did they put their legacy in the hand of a guy they knew nothing about? None of them saw the book before it came out. And, with Bernie, if you know his history, he didn't have any custodians for his assets, which is a huge red flag. And a Wall Street shrink told me that he probably viewed you as a custodian that he could control, just like anybody else. Now, Andrew and Ruth and Catherine Hooper, to this day, I can't quite tell you why they trusted me. They didn't know me. Catherine Hooper told me after she saw me on CBS Sunday morning, where I talked about whether the family knew or not, she thanked me for following the truth. And she had told me when I first interviewed her that she didn't believe Andrew knew to the depth of her soul, but if I found it, she would accept it. And which I thought showed a lot of character.
All right. So for whatever is, the skies parted, the heavens parted, and you were graced with getting into the mind, or at least communicating with this. I don't even want to use adjectives, because whatever I say is going to be wanting to how many lives he destroyed. But here you have a guy who was literally on top of the world. I mean, there was no greater guy than Bernie Madoff, and you'll tell us in a few minutes why he was such a powerhouse on Wall Street. How this guy did such evil to so many on such a scale that no one ever even came close. Charles Ponzi couldn't do it, and he was the originator of the Ponzi scheme. So before we begin, I want to start at the end. It's December, a day or two right before Christmas or so, or about, right? December what?
He gets arrested December 11th.
Okay, so this is December 10th. Yeah. Right. So December 10th, 2008, right? Bernie Madoff calls his two sons to his apartment, and he sits down with them, and he's been acting weird all week or so. He's been having backaches, lying on the floor, going crazy. And what does he tell them? And he goes, has Ruth there, his wife, as well.
Yeah, actually, Bernie is in his office before this, and he appears to start to have a nervous breakdown. And his secretary is watching this, and that's when the boys come running in. And they don't know exactly what's going on, but they know they got to get him out of there right away. He puts his jacket on. They literally almost carry him out, and then they go up to the Upper East Side, where they had a co-op on the top floor of the building. And Bernie says that it's all fake and all of that. And Ruth, the first thing Ruth says is, "What is a Ponzi scheme?"
Wait, so hang on, Jim. So he's sitting there with his two boys, who are also in the business, but in a different section. We'll talk about that. A different floor, different type of business. He has his wife and his two sons there, and he confesses and tells them what? What does he actually tell them?
Tells them none of it's true. None of the investment advisory business is true. That it's a fraud. That it's a fake. And Mark, I believe, convulses almost immediately, and Andrew rounds thing up. Both of the boys leave the apartment very soon thereafter to figure out what to do. And obviously Ruth stays back, and she represented to me that the first thing she asked him was, what is a Ponzi scheme? That she didn't even know what the heck he was talking about. And the boys just, go and call their lawyer, who calls the SDNY, the Southern District of New York, one of the prosecutors there. And the prosecutor thinks he says, I have a $65 million financial scam. And the guy says, okay, call us first thing tomorrow morning. And his lawyer says, no, I'm talking 65 billion. And the guy chokes on it. And they send the FBI right up. And Bernie also says to them, that first question is there an explanation for this? And he says no. And
okay, so at first Bernie confesses, and he says, look, it was all me. Excuse me. I did it all myself. Yeah. Turning myself in. And as the story progresses, we start to find out there are a lot more accomplices. It's been longer than anyone has thought that he was taking money in and paying out. And it affected not only people in the United States, but people on different continents throughout the world. I think it was close to 17,000 plus people and feeder funds and more. And it just reverberated where some people committed suicide after seeing all their fortune gone. So now I want you to take us back to this guy, Bernie, as you got inside his head, or maybe he got inside your head. That's how manipulative this guy was. So, and, if I would speak to this guy, I would think he's getting inside me. It's like Silence of the Lambs with Anthony Hopkins. I would think he's really getting me. He's too sharp. He got $65 billion from a lot of smart people, and he was able to do this for like 30 to 40 years. So I'd be nervous. But anyway, Bernie is a guy from Queens who starts at the bottom without any connections. Tell me the story how this guy from Queens in a sprinkler business, and I think high school or right after high school, marries an accountant's daughter and becomes king of Wall Street.
Yes. And I think it's an important, perhaps, motivator under the table, though Bernie has no insight into his own psyche, if you will. But he grew up in what I call the shadow of failure. His father had several businesses that seemed to fail, declared bankruptcy in a sporting goods business, was found to have a brokerage, if you can believe it, a broker-dealer out of his house that was shut down by the SEC, though Bernie misrepresented to me what happened. But he was an ambitious guy, and he went off to Alabama, University of Alabama, and he had started dating Ruth Madoff when she was 13 years old. He was 16, and he lasted a year in Alabama before he was drawn back by her, went to Hofstra, and he was just set on making a name for himself on Wall Street. And, out where he was metaphorically a long, long way from Wall Street, though it's a subway ride. And he was dead set on doing it. And he had tremendous brilliance. And he found some mentors of highly legitimate people like Gus Levy on Wall Street, some Jewish leaders on Wall Street.
Gus Levy being head of Goldman Sachs.
Yeah, Goldman Sachs.
Right, one of the legends on Wall Street, Gus Levy.
One of the legends on Wall Street. And they, in fact, helped him as he called it, feeding him scraps on what were convertible securities, that an arcane part of the market that he ended up doing innovation in and dominating in a segment of it. But yes, he went down there and he built this thing from scratch with his brother. He had continual insights in holes in the market. The pink sheets back then, all the OTC stocks that weren't on the New York Stock Exchange, they weren't transparent. There were no prices available. You actually had to call dealers on the phone, and they were all separate regional exchanges. He had a vision to put all that together. His brother had the architectural vision from the technical side. And damned if Bernie didn't pull this off, break the monopoly of the New York Stock Exchange, end up the number 3 volume trader on Wall Street, and developed a niche when it was very unpopular to even deal with the discount brokerage firms. He helped legitimize them. The price of commissions came down.
Wait, Jim, let me just put some color on this, because you're an old Wall Street guy. You got all this. Okay. I'm just going to put a little color on this because I got what you're saying, but I want to just, today you could trade on your phone. It's a second and instantaneous execution. Back in the day, and I remember this when I started trading back in the late 70s when I was still in high school and college a little, and then became a floor trader. When you wanted to trade stocks, when you say the pink sheets, these were physical sheets that were pink. They were off the exchange in a sense that there was little volume, little disclosure about them. And the way you traded these, you called up someone who dealt in the pink sheets. They would make you a market, let's say to buy at 10, to sell at 12. They would make that spread. Sometimes these spreads are even larger, and they'd make that $2, $5, $10 difference.
Yes.
And when you used to place an order with a broker, he'd say, let me get back to you. And you sometimes up to a day or two. And they used to call around and get quotes and say, the best one I got is 10 bid at $13. What do you want to do? Buy at 13 and sell at 10, or that's it. That was it. And let me just add one more thing, and then I'll let you go, is commissions. there was no negotiating commissions. This was before May Day of 1975, where commissions were fixed. There was nothing discount broker. So when you bought a stock, you had to figure that you had to make X percent just to overcome the commissions and the bid offer. So it was a lot harder. Well, let me put it this way. It was more of a longer term play. Now, Bernie sees this as being archaic. It's like we're doing email today and they're still using teletype or they're still using the fax machine. He comes up with this new way to do what?
Basically, I just said, like, put the U.S. exchange on a screen, on a cyberspace, by uniting the various disparate exchanges, right? And then, of course, you've got up-to-minute pricing and all of those kinds of things. And you're right, with fixed commissions, he was putting a lot of money in his pocket, which led to payment for order flow, which we could discuss separately because that's a big issue right now. But the fact is, it was legitimate, and he was finding niches in the market. On the convertible side, he actually, at that time, you talked about how archaic it was. Conversions were taking sometimes 3 weeks. And he actually built a back office to get rid of that whole time spread. Very unusual for a small, tiny brokerage firm to build a back office like that. And he ended up getting into that field as well. That was actually his first niche before the split strike conversion.
Jim, let me interrupt 1 second. Now, it's very important to appreciate this, folks, is back in the day, this was to the major brokerage houses' advantage not to have this so automated, because then they could quote you prices. You had no price discovery. It's like a comic book store or a baseball card store back in the 1970s. If they walked in and they said this card was $5, you ought to pay $5. Today you go on the internet and you see it's 14 cents. But there was no price discovery back then. The prices were traded. Sometimes these stocks were traded by appointment. Convertible securities, as you mentioned, were a more complicated issue, which they made a huge margin. Wall Street was a money-making machine. And in comes this guy from Far Rockaway, him and his brother, without the pedigree, without knowing many people, bursting on the scene and saying, we see inefficiencies in the way the market is displaying this information. We're going to revamp it and squeeze money for the investor. Is that more or less accurate?
Yeah, and I'll say, you talk about no interest in innovation. The specialists especially had no interest in innovation because they're watching their job go bye-bye. Because it's pretty obvious that, well, all this stuff can be made electronic, can't it? And so, yeah, Bernie was viewed as a big threat. In fact, the head of the stock exchange tried to basically bribe him by offering a great specialist book if he'd come inside.
Right. So Bernie creates, and we're not talking about the illegitimate Ponzi scheme. We're talking about the two faces of Bernie, as you say perfectly in the book. I really love the analogy in the book, the front of the restaurant. He creates the front of the restaurant. Use a mafia example that have a restaurant, the front of the restaurant, it looks totally legit. It's down in the basement and behind in the freezer where the bad stuff takes place. But the front of the restaurant was really front of the restaurant. It was a 5-star, Michelin type restaurant. It was top class. It was a money maker for as far back as we know, about 2000 or so. We'll get into that in a minute. And at one time, this innovation part where his sons worked on a different floor in the Lipstick Building. Lipstick Building, the address is, where is that exactly?
It's around 50th on the east side, somewhere in there.
Lipstick Building. It's called the Lipstick Building because it looks like a case of lipstick.
It looks like a tube of lipstick,
Right, so the Lipstick Building. And there are 2 floors there. And one floor, it's 3rd Avenue, 885 3rd Avenue. So it's on East 53rd. If you live in New York, or just Google it on the internet, you'll see exactly what it looks like that. So there are 2 floors. There's the 17th, all right, and the 19th, right? Yep. Okay. The castle with the moat around it is the 17th floor. That's where all the shenanigans take place.
Yep.
Okay.
Yes.
No one has access to that. Now, we're not talking about that yet. The 19th floor where he puts his two sons, this is a thriving business where Bernie's getting volume, trading volume from the Schwabs and the Fidelities.
Yes. Yes, that's exactly right. And, he first off, it looked like a Hollywood set. He was OCD to the hilt. So that all the screens had to be the same tilt. Everything had to be black and white. No papers on your desk at the end of the day. And he was adamant that there was to be no regulatory screwing around. He didn't like even slaps on the wrist. Up there. It was all had to be by the book. And of course, Wall Street thought he was front running all the time, which is jumping ahead of customers' orders, right? Because you know that how that's going to move the market. And that's how they thought he was getting teeny weeny spreads that never resulted in losses because he had insight.
No, hang on, Jim. Don't jump. We're talking about the legitimate side of the business. We don't know the back of the restaurant yet. So the front of the restaurant is a Hollywood set. Regulatory spick and span, AAA. They can write textbooks on how to run a market making operation from Bernie Madoff. What was it? BLMIS. BLMIS. His initials, Bernie L. Madoff. Investments security. So that part of the business is totally legit. It's capturing, I don't know, you said how much of the volume of the stock market?
He ended up getting 10% of the share of the volume, which is third. And by the way, he had top caliber technology.
Yes.
There was ahead of the street in technology. He had real-time P&Ls, which didn't even exist when he did it, and which obviously allowed him to do great risk management. He automated traders from 100 down to 10, 15. So he was ahead of the curve all the time in that business.
So he not only created a phenomenal business, but from the perspective of the investor, they were getting best execution. Because back in the day, your execution, if you were buying or selling something, might not be the best because the brokerage firm could move the market, open up the spreads, a whole bunch of Wall Street tricks where they make a huge amount of money by taking zero risk. Bernie closed that gap tremendously and made it more of a democratized trading. Fair?
Yes. Not only did he do best execution, they used to brag about he did price improvement, which is better than the publicly listed prices on the screens. He was beating that while he was paying for order flow.
Right, which is absolutely amazing. So you just heard, if you closed your podcast right now, you just heard Bernie Madoff, the Messiah of Wall Street, the Messiah of the average investor, because he was doing stuff that created a level playing field. He became president or chairman of the NASDAQ. Was it president or
chairman of the NASDAQ? The SEC used to contact him when they couldn't understand shenanigans at one of the major firms, and Bernie would explain what it meant.
Right. So he knew where the bodies are buried. He knew how. It was almost like Joseph P. Kennedy in charge of the SEC back when Roosevelt put him there. As Roosevelt said, put the fox in charge of the hens. He knows all the tricks. So Bernie, and I just want to impress upon our listeners that this guy, you say, how do people get caught into this? It's like, I can't even give an example because it just boggles the mind. Here is a guy who is as straight can be, is making a huge amounts of money in a profitable area for the average investor, beating Wall Street at their own game, and 1 out of every 10 trades go through his firm. So it's not like you didn't know Bernie Madoff. If you didn't know Bernie Madoff, you shouldn't have been on Wall Street. That's like going into any business and saying, I don't know who Jeff Bezos is of Amazon, or who the hell's Bill Gates. No, everyone knew this guy. He was about as top shelf. You couldn't get any more top shelf. He was chairman of NASDAQ, for crying out loud. Okay, now he's running this business. As you said, OCD guy, it's spick and span, no papers, nothing on the desk, everything looks great. And I think when regulators used to come in, they used to leave behind their resumes so Bernie could hire them. Did you know that, right?
Yes, and as I said, the FINRA actually put their freshman orientation classes over at his place. And because they thought it looked like a Hollywood set, and that was what, so they would send them over there.
Yeah,
And then they'd put those guys on his audits too, make
right.
sure
But
they couldn't find
and then these guys would want to come and work for Bernie. It was just absolutely amazing. So if we don't understand, I really think it's so important. I think you did a fantastic job in your book, and you spent a lot of real estate in the book, explaining to the average reader how Wall Street works, how this guy revolutionized. And I'm not using that word lightly. Revolutionized the street. There was no reason. You want this guy, you want him as a son-in-law. You want him as a family member. Having Bernie was having royalty.
Yeah, and he was everybody's Jewish grandfather. He wasn't Gordon Gekko at all. He was, low key kind of guy, and he just, he was a great con man because he wasn't a con man. He wasn't trying to con anybody.
Right. Okay, let's get into the psychological thing in just a second, because the more I think about Bernie and the more I've read about him throughout the years and seen the 2 movies and read your book, which I think is outstanding because there are so many lessons in it, which I want to talk about when we get to that at the end. But if you don't appreciate what kind of guy he was, you really can't fully comprehend how bad a deed he did. Agreed?
Not only would I agree, but that business at peak was worth $3 billion in and of itself.
Right. So he had a business that he created from scratch with no context.
$5,000.
$5,000, right? Okay. Now that's the Bernie that he wanted the world to see. As you use in your book, which I think is a great analogy, the front of the restaurant. Everything, it couldn't be better. Perfect, Jim. Now we go to the crap, how they make the sausages. He had his second business, which was called?
Investment advisory business.
Investment advisory, where he took people's money and said, I'm going to invest it for you. Forget about what he invested in, but basically investment advisor, I'm going to take your money, I'm going to manage your money and get you a real nice, consistent return that doesn't fluctuate much. Perfect if you're retired. You live off that money. Great, Uncle Bernie's taking care of you. Now, he takes this money and he becomes, I don't know what the psychological term is, but as he starts taking this money, he can't deal with losses, right? That's one of the reasons. So he loses money in the beginning, which we don't know where the beginning is. But where did you see the beginning of the Ponzi scheme start to develop where Bernie couldn't deal? Because it wasn't the money. It was, right? I got that sense from the book. It wasn't the money which was driving him. It was something much bigger than that.
It was not the money that was driving him. And remember, too, he obviously loves this public posture of the success of the market-making business. But for some reason, he doesn't want anybody to know that he's in the investment advisory business. He was telling everybody and his feeder funds, you tell them I'm executing trades. I don't have any discretion on the investment strategy, because that's what he was doing upstairs, executing trades. So he was not looking for any kind of profile. And as you said, 1962, he had 12 family members and then 12 more non-family for 24 clients. He put them into an IPO, and that's supposed to be stabilized by the underwriters. They ran to the shores, and he totally panicked and borrowed $30,000 from Ruth's father and paid them all back. Which nobody on Wall, no firm pays somebody for losses.
Let me put that in everyday English. He invested people's money in it, 24 people, 12 family members, 12 but close friends, who entrusted him with money. He took the money, bought into an IPO where the sponsors of this were shady, walked away, the stock plummets to zero, and Bernie feeling so terrible that he lost people's money, even though they knew it was a big risk, even though they knew it was a lottery ticket.
And they had the money anyway. It was only $30,000.
Right. He went and got the money from his father-in-law, who was an accountant, and paid everyone back, which, first of all, by the SEC rules, you're not allowed to do that. It's illegal to reimburse clients for losses. But Bernie did it at a sense of what? Why did he do that?
And again, it sounds like altruism almost, but it was ego in the sense that he couldn't psychically accept that he lost money. And to me, if the story is true, he returned it and all that, it was still incredibly sort of revealing to me that he felt he had to reimburse rich people when the market turned against them briefly. And as Ike Sorkin told me, his lawyer, people who were his clients figured out pretty quickly, hey, you don't lose money with this guy.
Right. So, okay, so the legend builds. And now once he gets a taste of that, that he can make, what was it, the sense, Jim, of walking into a room and being godlike in the sense that it was an ego thing where I never lose? That, you know, is that more or less it?
He the way he saw it was, I'm a people pleaser, Jim, and I have to be the go-to guy, and I have to deliver whatever's asked. I used to think it was absurd, Charles, when he'd have these cash crises, right, and almost get caught, but at the same time offer his sons $2 million loans because they needed it to buy co-ops or whatever, and he wasn't going to say, no, I don't have any money right now, or I can't do it, or it doesn't make sense. And he'd be scrambling for money while he was giving his kids money. It was all in his, it wasn't in his psyche to be able to say, I made a mistake, or I need help, or no, I'm not going to give you that return.
Right, which is, you know, it's not normal. That bottom line, investing there's always the possibility of loss. Everyone who invests that.
It's crazy on Wall Street. You know, James Simon of Renaissance is the best hedge fund manager in history, 39% average returns after fees. He only makes money on 51% of his trades.
Right. And he experienced, I think, a down year last year, or pretty, one of his funds. I'm not sure. No,
yeah, you're right. He has a big fund that,
but
his core fund, though, is 39%.
The guys who
by the way, he had money with Madoff for a while.
When he took it out, which was amazing.
Took it out.
Yeah, but it goes to show you, even smart guys who know the business got sucked into this. So now Bernie has this compulsion, not only in terms of OCD stuff, not in terms of just building a business on the outside, but he can't say no. He can't face the fact that he's mortal and can lose money. Yep. So now he starts getting whom into this fund? Because in the beginning days, it wasn't feeder funds, it wasn't hedge funds, it was whom? Who was he getting into the fund at the time?
You know, initially, and this sort of gave him the model to how to build it. Saul Alpern, who's the father-in-law who gave him the money, when he retired, the accounting firm became Avellini and Bietis, A&B. And that was essentially his first feeder fund. They were funneling money over. The clients did not know where it was going. They were not allowed to reveal who the money manager was. And the money manager insisted, which was Bernie, that they put in there that he was only executing trades. And that's when it began. And the money was coming in, and the A and B folks had structured it as borrowing from their clients and then paying them interest. So what was happening was they were offering their clients 9%, and Bernie was guaranteeing them 11%. The numbers were actually higher, but just as an example. So they pocketed 2%, they gave the clients 7%, and that's how it all started until the SEC came in and said, no, that ain't kosher. And then it went from there.
Right. So these people were feeding Bernie money. They weren't asking too many questions as to how this guy was giving a guaranteed rate. They didn't care. Or they put a blind eye to it. Whatever it was, they were making money. This guy had all the creds as his career starts to take off. And how could you not trust him, right? Okay. So like any Ponzi scheme, it goes after the people of their own. So Bernie is in touch with the Jewish working man and woman, right? Those are his original suckers. I can't say, I don't know what they're called, but victims, really, that's the best term. His victims, right? So he goes after them, and word spreads that you have to be asked by Bernie to be in this fund. He doesn't solicit, and you can't ask him to be in the fund. Is that right?
Yes, that's right. And after the A and B, the SEC insisted that the structure A and B had was not legal, and that Bernie had to return all the money to them, right? What happened was these guys didn't want their money back because they were making so much. So the individuals sent it back, and that's how it started. They figured out, Bernie and his right-hand man figured out how to scale that up. And suddenly they went from 300 to like 3,000 clients. And by the way, when you said that you couldn't get into it, Bernie, there were 14 banks in Europe who all thought they were the exclusive to Bernie. We can get you. We're the only guys here in Europe, and there were 14 of them, and it was always like, Bernie's shut right now, but I can get you in, kind of deal. And he did. He sat back and just counted money. He didn't ask people for money.
So what he did is he used the most, basic kind of instinct that people have is exclusivity and scarcity. And he just played on the exclusivity and scarcity. And if Bernie wanted in, you couldn't ask questions. If you ask questions, you piss him off. And even if you recommended someone to him that he didn't approve, he would yell at you for how could you spread my name around? You're out of the fund. Always threaten people with being out of the fund.
Yep, and he would not take them in. His sons, who were seen by the public as running the market making business, often couldn't get people into his fund because Bernie was turning them down because he knew they were going to be crash dummies. But the boys didn't know that, and it was totally hurtful to them that they didn't even have the power with their dad to get guys into his fund.
Yeah, it's amazing. It's like your dad being able to get you everyone else courtside seats at the Knick game, and you have to sit in the bleachers, and you can't even get anybody courtside seats. What a bad father. But it was Bernie's way of protecting. But by the way, let's stop here. There's nothing, there's no mercy, there's no apology, there's anything for Bernie here. We're just explaining what went on and the mindset of people. So I just don't want anyone to think that Jim Campbell wrote a book trying to explain in the sense of having sympathy for Bernie. In fact, you read the book, and as I mentioned, I read it right before I went to sleep each night, and some parts were really sickening because it was so sad what happened to some of these victims who at 70, 80 years old, lost everything, and then had to go live with their children, and some committed suicide, and how many people had mental health issues and physical sickness that nobody counted. But there were a couple of suicides attributed to Bernie losing money, stealing money. So now...
Including his son.
He lost everything. Look, it's poetic justice, right? His two sons, one son dies slowly from cancer, the other one hangs himself, and his wife's living in a small apartment now, living out her days, nobody talking to us. So he destroyed his house. He destroyed his house. So Bernie goes ahead and his fame starts spreading because he's not promising 50% returns or 60% return. What's he promising, Jim?
Yeah, you're right. That's another thing is he kept himself under the radar. And towards the end, it was 11%. I talked to victims whose accountants and advisors were saying, why is your money in here? You can do much better than this. So you're right. Now, in the beginning years, when there was higher inflation, and he was paying his big four, for instance, his co-conspirators, 30, 40, 50%. So he was giving returns that looked excessive, and that was coming out of the lower returns that that his core group was getting.
Right now, let's be totally clear. These aren't really returns. Bernie will tell you that they were legit at some point, but from your discovery, and I want to tell you, when I read the book, I don't even start with how many mountains of cartons you had to go through of data to actually piece some of this stuff together to refute what Bernie was saying or to prove what he was saying. In many cases, it was a bald-faced liar. It's not there. So how, when he was taking this money and producing these type of quote-unquote returns, was any of it, from what you've uncovered forensically, any of it ever real? Any of it?
No, I don't believe that it was ever real. I think he was always short money. I think he was always, and as you say, a Ponzi scheme means there's no real investment activity going on. And I don't think there was any real investment activity. I think he faked it all along once he saw that he couldn't tolerate any kind of losses. And the forensics all support that. As you know, he was trading more options that existed in the market. The prices didn't match the days, and on and on.
Okay, so now he does this through the 60s. He told you, no, I only did this through what I started in 92 or so?
Yeah, 1992.
92. Okay, so that's a lie because Bernie was doing this way back. You caught him in 13 different lies. And that's the problem with a liar. They just can't remember all of their misstatements. That's my mother used to say, when you tell the truth, you never have to remember anything, right? So it's when you lie, you got to piece all this stuff together. So Bernie was from the 60s, 70s, 80s, and 92 by his own admission, able to continue this game, and it started to mushroom to the point where he's by 2000. How much money is he supposedly managing?
It scales up. Remember, I said the A and B 1992. That was the first feeder fund, and then all of a sudden the feeder funds avalanched him, and it was 65 billion was the final number. And I don't know exactly what it was. I know that he was at 15 and 16 billion at a time when that would have been the biggest hedge fund in the world, likely, which would have been right after the 92, 95 time frame. And then it just exponentially grew. And I mean, he was growing. Remember, he was having positive 1% returns a month.
Right.
Think about that.
Right. Yeah. It's look, I managed money from 86 on, and when back in the day, when I do remember running in to a few clients throughout my career that told me, even though your returns have been beating the S&P, I'm not going to give you money because I have a guy. It wasn't Bernie at the time. It was some other guy who was in real estate who's guaranteeing me 10%. Or I have something else where I'm getting 8%. I kept saying, look, God has not created an instrument with no risk, 7 to 8 percentage points above a treasury bill, consistent. It just doesn't exist. I don't know it does for me, but they all blew up eventually. But put that aside. So people were willing to suspend any type of reality, put themselves in type of a chamber of ignorance, and saying, oh, he must be doing X. Meanwhile, it was virtually impossible, right?
Yeah, I break it into like a couple of segments, right? There's the big four and those kind of guys, and they know that there's fraud going on.
Jim,
they don't know
talk about who the big four are.
Oh, sorry. Yeah, the big four were his old line big investors who bailed him out repeatedly over the years, or helped provide cash to get him through, or collateral that they could use for loans. And these guys came to have the power to extort him. And the biggest was Jeffrey Pickauer, who I mentioned, who took $7 billion out, 9 times what Bernie put into the fund. Those guys I call, co-conspirators. Then there's the willfully blind, which is the hedge fund guys. They know that something's not right, and they don't know what it is either. And then there's a third group that falls into, we totally trust Bernie. We don't know what he's doing, but we know that he's an honest, good guy. The willfully blind are, we don't know what Bernie's doing, but he's our guy. And we think maybe it's front running, but we're not going to look and we're not going to ask. So that there were different types, from guys that knew it was fraud to people that didn't look to people that were totally suckered.
Right. Okay. So now these big four, they were stealing as well, because they were telling Bernie what numbers they needed to make, and they were charging or making us charging. They were making the spread between what they promised and what they asked Bernie. So they offered to their clients 10%, and Bernie was paying them, let's say, 15%, and they would take the 5% for themselves. Is that right?
Well, of the four, one of them, Stanley Chase, was doing that. He had his own fund.
Yes.
But these four were really only investing for themselves. And they were calling in literally, and Pickauer literally called in and says, this is the gain I want. And they'd go calculate it. And then he'd call back and say, this is the loss I want. And they'd go.
Wait, this was only for themselves? I thought they were.
This is only for themselves. Stanley Chase also allowed to have a hedge fund where Bernie did the same thing with all the other guys. Chase had no idea what the strategy was and said, don't even try to explain it to me. All I want is no losses.
Wow. I didn't know those other three guys were doing it for their own money. That's insane. That's absolutely insane. I mean,
Pickauer put in at most $200 million of his own money and got out $7 billion.
$7 billion. Well, that's a great investment, right? So, okay. So, fast forward throughout the years, he's calling it some split option strategy, which if you could explain it, which I don't want you to do at any point because the book has it in there, I'll explain to people very simply. If Bernie did what he said he did, there were not enough options in circulation to accomplish what he said. And I was mentioning to you, Jim, Ponzi, I read a book on Charles Ponzi. He did the same thing with postal stamps back in the day.
Yeah.
the original. There weren't enough postal stamps in creation to do what Ponzi was saying. So Bernie followed the same thing, but people turned a blind eye to what was going on by trying to rationalize it, that he's doing it off, doing it a private market, or he's doing it off,
Yes. Yes.
Or with, what do you call it? With, what did they say? It was private market, but no, not private market. What's the term?
Off the exchange.
Off exchange,
Yeah.
off exchange,
Yeah.
right. So they're doing off exchange. So they were willing to close their eyes because life was good. Now, I do remember in 2000, I think it was, where there was an article in Barron's about, and we used to get MAR at the time, Managed Account Report.
Yes.
Right.
Yes.
So, and I remember they looked that up, and they used to write on every hedge fund. And Bernie, which amazingly wasn't even a hedge fund. He flew under the radar, right?
He wasn't even registered.
Wasn't registered. And now the SEC is tipped off to this. Barron's writes a whole article that the returns are too good to be true. And I think there are 20 or 30 points in that article or something, or am I mixing up Marco Polo's?
You're right. Aaron Arvid wrote the Barron's article, and you're right that it was too good to be true and only positive returns. The 30 red flags is Harry Markopoulos, whistleblower.
Okay, so a whistleblower comes and looks at him, and people, by the way, folks, I just want you to realize, if you're in the money management business, you are losing money in terms of assets coming into your house instead of Bernie's house. You are losing money because you can't beat Bernie's returns. Why would someone risk 15% type of returns with you, which you might get or might not get because you're honest and markets go up and down, when Bernie's guaranteeing you X? So people losing on. So what people did, like Harry Markopoulos, and where they tried to recreate this.
Yeah, he tried to re-engineer it, and by the way, it only took him about 2 hours to figure out that the returns couldn't be true, and that what he was doing couldn't his own strategy couldn't deliver what he said, and B, it couldn't have worked anyway because obviously there were no losses or whatever. It took him only 2 hours. I actually have a screenshot of the spreadsheet in the book.
Right. So now the other co-conspirators here have to be, as you point out, government regulators, because the SEC knew about this, the Boston office knew about this, and because of the politics between New York and Boston, a whole bunch of other crap that goes on, Bernie still gets to wiggle out for another 8 more years and take in billions of dollars more and destroy more people.
Yes, and also he brilliantly exploited the SEC silos. And what do I mean by that? He didn't register as an investment advisor. Investment advisory examination teams are separate than broker-dealer. So the bad stuff was in the 17th floor, needed an investment advisory team. They never came because they didn't think he had one. And the broker-dealer guys were clueless how to uncover a Ponzi scheme. And it was a brilliant exploitation. Harry will tell you, in his mind, the most brilliant thing was he didn't let anybody in the firm talk to them, to the examiners, but himself. He locked them in a room, and he was the only interface. He fed them what he wanted. He gave them fake reports. And if you look at the silos and the fake and controlling the dialogue, he just ran circles around the SEC.
And add one more point in there, which is understood, is his celebrity, who he was as a person. You couldn't, if you brought up a claim against Bernie Madoff and you were a junior examiner, your career's over.
Not only that, he intimidated the hell out of these. They were, most of these examiners then were really young guys out of law school, didn't understand the market to begin with, and he would intimidate them right to their face, and they'd be shaking sometimes, and they wouldn't ask the questions. And if they did try and ask, their management, the SEC said, no, you can't go out and do that. You're going to piss people off.
Okay, so now it's on the front page of Barron's. Harry Markopoulos tells the SEC. Word gets around Wall Street pretty quickly.
Yep.
And it still goes on. Why?
Yeah, well, it's a good question. First off, the SEC repudiated Markopoulos. They thought at first he was running a hedge fund that competed with Bernie's. So they said, this is sour grapes, just like you said. You can't compete against him. The second thing was they didn't understand a word he was saying. especially back then, Harry was not able to dumb himself down to explain it. And the guy, they had no clue what he was talking about. And I mean, literally. And part of it was Harry's fault, which he admits now. He's very humble about it. And so then they send these guys in, right? And they keep examining the same thing, even after they cleared him. That's how they got away with it. They kept looking for front running. Okay. And obviously there was no front running because Bernie wasn't trading through his own market maker. Hell, he wasn't even trading for real.
Right. They were looking for something that would happen in a real world and real trading, and he never did it. Therefore, they never find it.
And he loved it. They were chasing the wrong rabbit all the time. You know, he'd come in, go ahead, go look at that business. You can trace every trade there. It's totally legitimate. And by the way, as I always say, the SEC. He gave them the account number at the depository trust, which is the clearing and settlement entity, and all 500,000 trades a year of the market making could be matched, right? He gave them that number and say, just ask for my sub account in investment advisory and you'll see everything is traceable. And he told me, Jim, I gave him that on a Friday night. I expected to be in handcuffs by Sunday. The SEC never made the phone call, never asked, because there was never a sub account for the investment advisory business. Forget trades. There was never even an account there.
All they had to do was make one phone call, right? One phone call. Okay. So now forget about the regulators for a minute. What about the rest of Wall Street? What about the guys who should have known better? The J.P. Morgans, the Goldman Sachs, those companies, they kind of knew what was going on, but closed their eyes to it, or were they totally blind?
Again, I would divide it up. The J.P. Morgan was his bank. That meant that they were the only entity that could actually look into his finances, right? The hedge fund guys didn't have any access, and they could have looked into his account, which, by the way, Bernie told me never had more than $5.9 billion in it, ever. And all J.P. Morgan would have had to do is to say, okay, this is an equity fund. We're going to find counterparties in here, and we're going to find dividends. Okay, when you had of record, and because you can't trade without counterparties. Okay, so that would have also been a 5-minute look. There was never a payment to a counterparty ever. There should have been $4 billion of dividends over those years, and there wasn't $1 of dividends. So J.P. Morgan is a different animal. They had no excuse, really. Now, take Goldman Sachs, you mentioned, and Merrill Lynch. Both of those firms had reached a point where they forbade their employees from doing business with Bernie. So they knew something was up, and they didn't report him. So that to me is not good. And then, of course, you've got the feeder funds all over Wall Street who did no due diligence, right? And in some cases, weren't even telling their clients their money was with Bernie. They didn't find out until after they'd lost it.
Right. So you have the complicity of Wall Street. And, you figure as an average, forget about the feeder funds, because the feeder funds are at least putting on a masquerade. We have a due diligence, they have a nice office, and they don't tell you that they're investing with Bernie, so it's a shock. You have no idea. Whatever, you're not asking. You trust their due diligence. They have a whole team of PhDs and smart people doing it fine.
Exactly.
Right?
Exactly.
So now, the average person who is getting in because a friend of a friend lets you into this fund, you're saying, my gosh, there's really smoke here, and the article in Barron's and the talk, and maybe I heard, come on, all these people, you're telling me that all these people on Wall Street are being duped? Impossible. The guy's been doing it for 40-something years. So you're kind of lulled into a sense of complacency. And at the end of the day, the government just drops the ball tremendously here. So you have a confluence of events where, you look at, how did anyone invest with them? How could you not invest with them?
Yeah, I mean, it looked like it was a no-lose deal, and you're right. If you think about it, the SEC actually gave him 5 seals of government approval. You're an average investor. The SEC's invested this guy, investigated him, and cleared him. What should I have to worry about? Right.
And they had allegations. They went and investigated, and they found them. Well, let me clarify. You don't really get, folks, a seal of approval from the SEC. It's an implied sense of, look, if they went in and
that's how he marketed it.
Which is, by the way,
turned around and said that.
Which is illegal to do. It's one of the things you can't do this. So you can never say, I was examined by the SEC and therefore they gave me the seal of approval. No, you didn't get anything marked against you, but that is nothing. So really, when you look at this whole package, you could understand how people were sucked in a huge way for such a long period of time. Okay, now, the blank hits the fan December 2008. It makes front page news throughout the world. Millions, I wouldn't say millions, but tens of thousands of people are involved. Continents, almost every continent. I don't know if there was anyone on Antarctica but there probably would have been a feat of fun if the weather was good. So you had, it just shook everything. And those who thought they knew said, look, I knew, but didn't say. Those who should have known said it caught it as blindsided, like the SEC. And those who were wiped out, these tens of thousands of teachers, retired people. And folks, these are people who their husband or wife died and on a friend's advice gave the money to Bernie. And Bernie looked you in the eye and shook your hand and said, don't worry, I'll take care of you.
It's exactly what he did. I mean, the woman from Chappaqua whose statement is the one that I show off to people when I do presentations. Bernie said, you have never met me. And if you're uncomfortable, I'm going to give you your money back right here in my office. And she says, no. He puts his arms around her and he says, you no longer have to worry about anything.
Yeah. Elie Wiesel, the famous Holocaust survivor who went throughout the world. I remember an interview with him. He lost $7 or $8 million of Elie Wiesel's money. This is money given to Wiesel, or Wiesel set up as a foundation for Holocaust remembrance, right? And Bernie takes that money, knowing it's a Ponzi. It's just absolutely. I'm sorry, I shouldn't be even laughing. It's just so preposterous what kind of evil this man was. Takes that money, loses it all, and Elie Wiesel, who is trying to always find good in humanity after going through the Holocaust and Auschwitz, says he is evil. He personifies evil to take that kind of money. And Bernie wipes these people out. Now, the second time they get victimized, as you put in the book, so heart-wrenchingly, and what shook me, I have to say, really shook me, was the perceived government and federal protection of your money. I want you to talk about that.
Yeah, that is, and I'm glad you asked that, because that's, to me, the unheralded scandal that really hasn't got a lot of exposure. SIPC is the Securities Investor Protection Corp. They are the equivalent of the FDIC, although the FINRA and SIPC try to deny that they're exactly the same. The only difference is that they say they don't make up recoveries for market losses, which is obvious. But in any event, the FDIC was formed of the New Deal, and they have honored and paid off every single legitimate claim, and hasn't cost the government $1 because the banks pay risk-based premium. SIPC comes in. They were warned 16 years before by the GAO that you are inadequately capitalized and unprepared for a major Wall Street broker-dealer failure. 16 years before.
Who is the TAO? Who's the TAO? Explain who that is.
The Government Accounting Office. They do the independent investigations for Congress. So they put SIPC on notice, essentially, at least through Congress. So we get it. We got to go up to Bernie's Ponzi scheme collapse. The premiums that the firms are paying then, and I'm talking about whether you're Goldman Sachs or a one-man guy clearing through Bear Stearns, is $150 a year. Merrill Lynch and Goldman are paying $150 a year into the protection fund of SIPC. And there was a total of $1.6 billion in SIPC. Their losses on their statements were $65 billion. So what does SIPC do? And you're an investor. It says on every statement, the marketing stuff, that they will come in if you're a victim of fraud, right? Well, they say, we don't recognize Ponzi schemes. We don't recognize final statements of Ponzi schemes. So imagine this. The message is your Merrill Lynch statement at the end of the month might not be real money. It might not be recognized, which to me is just totally absurd. So how did they get $14 billion back out of the $18 billion that was the original investment? Well, 10 of it came from Bernie's Big Four, and Bernie put the pressure on Pickhour in particular to get $7 billion back. The rest came, believe it or not, from a subset of Madoff victims who had money clawed back that went to another subset of Madoff victims.
Jim, let me
sidestep any responsibility.
Let me stop here and let me put this back into English, because
Okay.
it's amazing. It's amazing. When I read in your book, I couldn't believe what I was reading. SIPC was like the FDIC, folks. Your bank fails, they pay X amount of dollars for the money on deposits.
Right.
Okay. SIPC is the same thing for brokerage firms, for fraud. So this way, it makes you feel comfortable putting your money with Schwab or TD or whatever it might be if it disappears. Now, Jim was mentioning that the SIPC, the premiums, because the banks pay premiums to the FDIC to create this fund, SIPC, the premiums are paid by the investment banks, the investment houses, and they paid $150, not a percentage of assets, not a percentage of client segregated funds, but $150. Different story, different conversation. Let's move on. SIPC fails to pay these people back a penny. What do? A trustee is assigned to it, whose name is Irving
Picard.
Irving Picard. That's a tragedy in and of itself. And what happens here is Bernie actually helps SIPC, because SIPC doesn't want to pay out of their own funds because they don't have enough money. He goes and rats on Pickauer and these other guys who are making so much money, who give back into that. So you mentioned, Jim, $15 billion. $10 billion comes from really Discovery on Bernie's behalf of the $7 million. And then another $3 million is Picard goes out there, Irving Picard from the SE, and claws back, which means goes back to the victims of Bernie's Ponzi scheme and says, you took out money in 2002. Those profits weren't really profits. Meanwhile, you took out $100,000, you now put it in your house or whatever, or you bought yourself a boat. We want that money back today. And
yeah, not only do we want that money back today, but you might not even have that money anymore, right? You could have spent it. And what it was these are Madoff victims that took out more than they put in. And they were the ones that were susceptible. If I had left my money in and hadn't taken it out, I'm eligible to get money from the Madoff guys that took the money out. And that's how they sidestepped SIPC itself having to pay for it. And Picard, by the way, has earned $2 billion, his law firm, in fees and expenses out of that $14 billion, okay? That's a pretty good spread on Wall Street in and of itself.
And he was going out banging old
14% spread.
Banging old people in the head, threatening them with threatening letters and visits and call. So you imagine for a second, folks, you're a 75-year-old retiree. Your whole life, your money was with Bernie. You took out $50,000 3-4 years ago, and you happen to be considered a net gainer, a net profit. They went back and clawed you back, meaning that 75-year-old guy, and you didn't have the money. What did you do? You lost the money that you had with Bernie because it never was real, and the 50 you took out. It was disastrous. It was the second victimization of these poor people.
Yes, and he threatened liens on their houses. Some of these people had to rent out floors to survive. He went after IRAs, which is the only asset these folks had left, and which aren't supposed to be tough. And he played hardball, and he played against the feeder funds. He did a tremendous job there building cases there. But in places where it was excessive like that, you're right. He's victimizing victims again.
It's just absolutely astounding. Okay, so now here we are, 13 years, 12 and a half years later from the Ponzi scheme, from when it was discovered. Many, many, many lives have been shattered. What has Wall Street learned from this?
Well, what has Wall Street learned from this? I'd ask what the regulatory bodies have learned from this. I have this thing that if there isn't some learning backed up by changes in regulations or culture, even more important on Wall Street, in my mind, that they tend to make the same mistakes over and over. And we're seeing right now what I call Robin Hood and Archegos, the family offices and the hedge funds. You see all these things that are obviously still around and will likely blow up. And, I would say I'm more oriented towards what has to change than what has changed. I'm very skeptical of the whole thing. And I don't think there'll be another Bernie. I do think there's a lot of offshore money, though, that's sitting out there that could cause problems and blow up as well.
I might get you off guard a bit, but why I said what did Wall Street learn? Because I don't expect much from the regulators. I really don't, because we both know we've been in the industry a long while. The regulators aren't. If they were good, they'd be in private industry. They wouldn't be serving the public, right? And many of them are really good civil servants, but many of them use it as a stepping stone to get into the private sector. Okay, that's fine. I don't besmirch them. I don't think that's a bad thing. God bless you. That's what, it's done in government all the time, and I have no problem with. But Wall Street, who should have known better, for example, J.P. Morgan, who was his banker, the so-called helpers of Wall Street, anyone getting commission, anyone making money, everyone, it was an open secret that Bernie's doing something crafty here, because it was just everyone who, look, I wasn't back, this happened when I was 36, in 2000 or so, 36 or 37 at the time. And I remember reading him say, it's impossible to get these type of returns. You just can't get them. Markets don't go straight up and they don't go flat line forever, and you just can't keep making money. That's called a treasury bill. And anyone who thinks they're getting that is really deceiving themselves, or on the other hand, it's fraud. You just can't do it. So right off the bat, if I could pick this up in my little hole in the ground, these big banks and rest of Wall Street, they should have blown the whistle, but no one did, because I think the fees were just too good.
And, you talk about J.P. Morgan. J.P. Morgan had entities within the bank that saw something wasn't right. The UK actually finally turned them in over there. And so even within the bank, it's awful hard for them to claim that they didn't know.
No, I think you had something where they were Bernie was doing something. Someone called it out in New York office and says, no, he brings in too much fees for us, right? The fees are too great. I think there was something there where one of the J.P. Morgan bankers, and there was a note or an email that said, leave it alone because the fees are good. Is that right?
That was another completely illegal fraud that Madoff perpetrated, unrelated, with which he ran a check kiting scheme against the bank.
That's right.
One of his big four. And again, apparently some management at J.P. Morgan knew it, but Norm Levy and Bernie were both. Norm was was the number two big four guy, and Bernie, of course, was the Ponzi guy. And they said, don't leave it alone. Yeah. Now, when I talked to J.P. Morgan's folks off the record, they denied that they looked the other way in the check kiting scheme. But believe me, it went on for a long time. They were doing $90 million a day of kiting. Yeah. And kiting, for those that don't know, is taking advantage of the float between when a deposit's made and when it's actually credited in your account.
Right. That couple of days spread, they're making that interest, which is small, but on millions and millions of dollars, it adds up to a lot of money for doing nothing, really, for really stealing.
There's another story like that at J.P. Morgan where they find out that he has a one-man auditor in New City in a strip mall, and one of the future chief operating officers says somebody should call that to find out if it's a car wash or something. And I said to myself, it was actually a money laundromat, but nobody called it. There were all these red flags up there.
Okay, so as we conclude here. How could the average investor listening to this feel good? How could I feel good that my money's in Schwab? I have no faith anymore in SIPC. I'm trusting that Schwab says the numbers that are on my statement are on my statement. Same way E-Trade, and same way Chase, and the same way any other brokerage firm. How do I sleep better at night?
The only way I think you can sleep better at night is to put your money into a low-cost index fund and watch it grow, and take as I say, take the 9% and sleep versus any of these other things. And now we should say too that I don't believe the major Wall Street firms are perpetrating any fraud on your statements and things like that. You can trust. Even though they don't have independent custodians, you can trust that they're not doing anything. Right. Now, if something happens and SIPC comes in, I can't vouch for what SIPC will do to recognize your statements or not. But you got to the Hippocratic oath needs to apply to the investment community, which is you need to take responsibility to do no harm to your own money too. Somebody tells you an investment you don't understand, but it's guaranteed, you got to walk away from it.
Yeah.
If you can't figure it out in 2 seconds, if your dentist is telling you, walk out of his office, don't do things that don't really make sense. People want to believe this stuff, Charles.
Right.
They do want to believe
Right.
that, they want to be able to say, I've got this inside thing and it's great.
Right.
And it's the best thing since sliced bread. You're taking advantage of people's natural wanting to believe it's too good to be true.
Right. And one more thing. I think that's well said, Jim. Very well said. I think there's one thing, being around this business for a long while, is that it's not as complicated as you might think it is. If something's really complicated, hold on to your wallet and run. Because the way to make money is pretty simple, right? Buy stocks that are going up and buy sound companies and hold them for the long term. Anytime you get away from that with guarantees and arcane type of spreads and option strategies and Forex and Bitcoin and all these, watch out, because there's no net below that. God has not created something where you can make a boatload of money without risking for long periods of time and call it legal. Just does not exist.
Does not exist. And the whole point of interest rate that's higher than the T-bill is because there is a risk factor in there.
Right, correct. Right. If T-bills are paying 2% over 10 years per year, which they're not paying 1.5% or so, if someone's offering you 6% or 8% or 10%, you have to ask, why did the heavens part? Yeah. And I'm the luckiest person out of 7+ billion people that I'm getting 8.5% more than a treasury bill by taking no risk. And the answer is, folks, it's too good to be true. It is. There is no Santa Claus or Easter Bunny. Sorry to say.
And I tell you, I have been stunned, Charles, how few people understand what their money is invested in. I could never find a Madoff victim that could explain to me what the strategy was. I couldn't find Madoff people on the 19th floor who understood what it was. And it's conceptually very simple. It just should have mirrored the market. Right. But which, by the way, by definition, can't always go up. But people don't understand.
And Jim, by definition, can't outperform the market. He was outperforming the market. Yeah, exactly. So owning the market, you can't outperform it. The average is the average for a reason, because that's what you're getting. You can't get better than the average if you're investing in the average. But so be it. Jim, I want to tell you, I really enjoyed your book, and the points where I got really sick about it, and I say this in a really friendly and nice way as a compliment, is how you look at it and you say, my gosh, so many people are so sucked into this, and it's just a real tragedy. At the end of the day, Bernie got his due. His family, unfortunately, who you wrote in the book, you went through, I don't know how many chapters, and you went through each chapter, chapter 7, 8, 9. You laid out a case like a lawyer. This is it. They had no idea what was happening. And folks, read the book. Don't say Jim doesn't know what he's talking about. He's being not. Read the book. He lays it all out there and lets you know what happened, who knew what, and why. I think it's an important thing, why they could not have known. Because Bernie was a genius in that sense. The name of the book is Madoff Talks. Jim, I want to thank you so much. I really think you did the investing community a real great service by spending, I don't know how many years of your life looking through every nook and cranny. You didn't do this as academic research. You did it really as a warning shot. Yeah.
And I want to thank you for saying that, too, because I'm not anti-Wall Street. I'm not trying to destroy Wall Street. I also want to say another thing, Charles. You came from modest circumstances out of Brooklyn, I believe, right?
Yep.
And you can be a big success on Wall Street being honest and, playing it straight and admitting when the street does things that aren't good. So you're a walking example of the good that does exist on Wall Street.
I greatly appreciate that. I really do. Everyone, Jim Campbell, go on and get the book, Madoff Speaks. He takes a lot of financial jargon, puts it into really palpable terms. And if you don't like those chapters, skip over them. You don't need them. Because I think, you know what I also like, Jim, before I let you go, and I don't want to keep letting you go because I could speak to you for hours. I just find this so amazing, is each chapter is really a self-contained book. Each one is its own article. You're getting a different glimpse of Bernie and the whole process in every chapter. And I found that I didn't have to know what went on before to read chapter 7. I didn't have to know what went on chapter 3. I did read the whole book, but it just really, how many years did this take you?
You know, that's a great point too, by the way. And it's one of the reasons that Netflix is interested in doing a documentary, because the chapters are kind of standalone stories, which fits a series like that, and we'll get much broader exposure to the whole story than reading a book. I first talked to Bernie in 2011, 10 years to when the book came out.
Wow. There's talk I heard in Hollywood that Brad Pitt is looking to play Jim Campbell. That's just what they say, but I see the resemblance. Jim, thanks so much, man. God bless you, and keep doing some great stuff.
All right, so I love you. Really, thank you for the interest and all the time you put in this.
Great, man. Thanks.
Take care.
Thanks for listening to this episode of The Charles Mizrahi Show. If you're a new listener, welcome. If you've been listening for a while, we're glad to have you back. Either way, we'd love to know what you think of the show. Please leave a review if you listen on Apple Podcasts. Reviews make it easier for others to find the show. You can also see the video of the interview on the Charles Mizrahi Show channel on YouTube.